Bitcoin's bull market warning. Altcoins versus meme coins. Hello everyone, and welcome back to the channel. In today's video, we're going to dive into the bull run and raging debate around meme coins versus more established altcoins. For long-term investors, altcoins may provide better risk-adjusted returns over a multi-year time frame. Let's discuss this and also touch on critical risk management techniques like avoiding leveraged trading in volatile markets. There's a lot to cover, so let's jump right in. Don't forget to take a moment to like the video, subscribe, and tap the bell to avoid missing more top-notch videos coming your way. An approval and the dance that followed. Recently, the SEC approved Bitcoin ETFs, a win for crypto. We saw the market jump as a result before losing steam. But we also noticed something unusual in the price patterns and on-chain activity. Other factors are getting priced in. Concerning the Bitcoin market, we're in a transitional phase. So far, the market has had a mixed bag of fortunes. It's not quite a bear market, but not definitively a bull market either. Caution is crucial amidst this uncertainty. The crypto ecosystem is incredibly diverse. It's not limited to just Bitcoin. While Bitcoin has experienced significant growth and still has room for more, it's no longer in its initial startup stages. Recent trends show innovation and the introduction of new elements into the crypto space, such as NFTs, Layer 2 solutions, enhanced smart contracts, scalability improvements like Solana, and the accomplishments of projects like BNB or Polygon. Too early for the bulls to claim victory. Although there have been significant capital inflows into Bitcoin, it's too early for the bulls to claim victory. Most inflows through the ETF could have come in through alternative methods. This makes the impact limited. The real game changer will be institutional involvement, but that's still a few months away. The Bitcoin ETF itself won't mark a significant shift. It's the institutional flows it brings that will. Until then, other factors like monetary policy and global economic conditions play a crucial role. The world hasn't fully recovered, and sentiments remain fragile. The light at the end of the tunnel is visible, but the distance is uncertain. Positive changes in monetary policy are needed for a more optimistic outlook before we discuss all-time highs in a new bull market. We're in a transitional phase. Not quite a bear market, but not definitively a bull market either. Caution should be used amidst this uncertainty. The halving is a very important factor. It will make Bitcoin more scarce and more difficult to mine, which, if demand is higher, then will lead to some interesting price appreciation. Bitcoin is expected to lead the charge due to its widespread attention, but it's now a more mature asset. As such, previous percentage gains seen in larger assets may not be realistic this time around. It's crucial to shift our perspective from expecting astronomical gains to focusing on the long-term viability and future of the entire asset class. Rather than fixating on 1,500% gains, the emphasis should be on attracting more users and customers. Long-term thinking is lacking in the space, and there's a need to recognize the significance of on-chain metrics in gauging the health and growth of the crypto ecosystem. A leaf from history books. Bitcoin halving cycles last about 4 years. At the commencement of each cycle, the block subsidy reward that Bitcoin miners receive is cut in half, which triggers a Bitcoin supply shock. Historically, Bitcoin's price has risen dramatically during the year and a half that follows the halving. The price then tanks and trades in a range for the cycle's other 2.5 years. From late 2013 until mid-2016, when the second halving occurred, Bitcoin's price fell from $1,166 to $156. It then rebounded to $780, which is 67% of the previous all-time high. Then it slid to 40% to $472 in August 2016. The $472 price point marked a local bottom just 1 month after the second halving took place. Another 2.5-year period that precedes a Bitcoin halving is coming to an end. This period began in late 2021 and will end up in April 2024 when the fourth halving is scheduled to occur. During this period so far, Bitcoin's price has fallen from $69,000 to $15,522 before rebounding to $44,759, which is 65% of the previous all-time high. Bitcoin, a more mature market. Having seen the traditional financial system in operation for decades, we know that institutional adoption is key for this industry to reach the stages and to be in the financial system at the level that we all want it to be and we all think it should be. But there is a wall of institutional money and interest that will be a core part of bringing this to wide mass adoption across every stack. Institutional adoption has been a recurring topic in conversations within the crypto space, spanning the entirety of discussions about Bitcoin. It's no longer just a distant concept, let me tell you. The institutions are finally here. This is going to be more than just dipping their toes in. Can Bitcoin ETF approval push Bitcoin to an all-time high? In the first few weeks of ETF launch inflows, the market is buzzing with activity. We have seen more capital inflows in the market, GBTC selling their Bitcoin holdings, and so on. Organizations are reassessing their portfolio to ensure maximum profit. The Bitcoin ETF scenario is going a lot better than many people in this space would have imagined. The inflows are very high. It's a different thing for ETF inflows to be high on day 1 or 2, but for sustained inflows for almost 2 weeks, this is sustained excitement. It says something about the dynamics. There are outflows, such as what we see with GBTC selling off their Bitcoin holdings. However, the outflows are limited, and it's part of the downward pressure on Bitcoin itself. But that aside, we've seen over $500 million in new Bitcoin flow in just a few days in some issuers. This is the amount of excitement and the level of speed. Also, because major institutional investors are not in yet, is something to be glad about. The major institutions take a long time to make decisions because they have a lot to wrap their head around. It's not like they just go ahead and allocate whenever approval happens. Financial advisors first have to speak with their clients, so the institutions we have right now are the retail plus institutions that can move quickly. These include family offices, some hedge funds, and traders. But if you think about long-term institutional investors like pension funds or insurance companies, this is not yet eligible for them. They have procedures and due diligence processes that include the product being available for a certain period of time. What if we don't get a soft landing? While the powers that be and major institutions will have you believe that we're on our way to a soft landing, or at worst, a mild recession, those of us who remember hearing the same rhetoric in 2008 aren't so convinced. Some reputable outlets have stated that we may be amid a melt-up. When this happens, asset prices rise parabolically before crashing catastrophically. This isn't too hard to believe given that the Dow Jones Industrial Average is at an all-time high, while the S&P 500 and the Nasdaq are almost there as well. This is the case while we're still in an environment where investors can earn over 5% risk-free in money market mutual funds. If a melt-up is currently taking place and Bitcoin's price is going along for the ride, then there are 2 more questions we have to ask. How high does Bitcoin's price rise before it comes crashing down? And what sort of investing strategy is best to employ if this is the case? You have one job? Don't jump into trades with high leverage. By all means, continue to hodl your Bitcoin and DCA or dollar cost average into the asset, as these investment strategies have proven fruitful for anyone who has held Bitcoin for more than 4 years. The one thing you might want to avoid amid this euphoria is aping into a large position at these levels, or use any sort of leverage. A fool and their leveraged Bitcoin are soon parted. If we see a massive drawdown in Bitcoin's price, you'll want to have some cash on the sidelines to buy, not find yourself Bitcoinless and cash-strapped due to acting like an overzealous gambler. As always, we don't know where Bitcoin's price will go from here. Maybe it will actually move up, only both into and beyond the halving. But if history repeats itself and Bitcoin performs the way it has right before prior halvings, we may see Bitcoin at a significantly lower price as the halving in April 2024 approaches. Altcoin versus meme coin. Meme coins make millionaires and get others wrecked. Previously, any coin apart from Bitcoin was considered an altcoin. This is no longer the case. The definition of an altcoin has evolved since the early days of cryptocurrency when only a handful of crypto assets existed. Back then, anything but Bitcoin or BTC was considered an altcoin. Today, the world of crypto assets is much broader. There's a wide variety of coins and tokens with use cases that go well beyond a medium of exchange, meaning they aren't necessarily Bitcoin competitors. Still, for a lack of better designation, the basic definition of an altcoin is any crypto asset other than Bitcoin. As the crypto market develops, we've seen the introduction of new elements to the crypto space, such as NFTs, Layer 2 solutions, enhanced smart contracts, and scalability improvements like Solana. This is in contrast with meme coins that are only about the jokes and thrill with no real problem solved. Meme coins are created out of nothing but popular internet memes or jokes. How a meme coin develops depends on how big the project can form a community. Meme coins depend on community support to survive. They usually have no real-world use cases, and if they do, it's usually an afterthought, brought up to keep the project alive. They are more speculative investments, and as such, are susceptible to rapid and unpredictable fluctuations. For instance, recently, a comment from a Solana whale made the price of a dormant meme coin, Toshi, suddenly pump. As we wrap up, it's clear that while meme coins have the potential for huge pumps and gains, they also come with massive risks and little real-world utility. Investors must approach meme coins with caution since they have the potential to either make you rich or wreck you financially. For investors with long-term objectives who seek projects that they can back and get returns on their investment, altcoins are likely a better option. Also, investors and traders are warned against any form of leveraged or margin trading in this volatile market. That wraps up today's video. Thanks everyone for watching, and see you next time.